The United States, if it was a company on the floor of the New York Stock Exchange, we would call it a zombie company. Why? Because it doesn't make enough money to cover its debt obligations, right? So that makes it a zombie company. It's operating in a perpetual zombie mode, which is it has to borrow more money in order to pay off what it borrowed before. If you look at it, the cost of interest now is approaching $1 trillion a year for the U.S. Treasury.
Earlier in the year, the United States Treasury Department published the executive summary to the fiscal year 2022 financial report of the U.S. government and titled it An Unsustainable Fiscal Path. Their report describes a sustainable fiscal policy as one where the ratio of debt held by the public to GDP, the debt to GDP ratio, is stable or declining over the long term. It explains further that since GDP measures the size of the nation's economy in terms of the total value of the final goods and services that are produced in a year, it is important to consider financial results related to GDP to determine the economy's capacity to sustain the government's many programs. The report adds that the country's current fiscal path is unsustainable as the economy cannot bear the burden of the government's many programs, and concludes that immediate and important policy changes need to be made. According to Trading Economics Global Macro Models, the U.S. debt to GDP ratio is expected to hit 133% of GDP by the end of 2023 and will probably keep rising indefinitely. This is because the United States has so many mandatory expenses that the only path forward is to keep borrowing money and inflating or watch the economy suffer a painful, agonizing death. According to former hedge fund manager and renowned macro analyst James Lavish, the United States has been able to wedge itself deeply in a nasty debt spiral, and the only path forward is to burrow even deeper. Lavish recently had a discussion with the Understanding Macro YouTube channel where he gave his views on the nation's fiscal path and what lies ahead. Lavish believes there's a 100% chance that someday in the future the U.S. economy will take its last breath because of the many terrible decisions that have been made in the past and will probably continue into the future. We will now bring you some important clips from the discussion. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. We love to hear from our viewers, and it really helps with the YouTube algorithm. Thanks, and enjoy the video.
I talk about the debt spiral so much, and this is a really important topic. The United States, if it was a company on the floor of the New York Stock Exchange, we would call it a zombie company. The United States has to issue more treasuries in order to pay down the treasuries that are maturing. Here's the problem. As it issues more treasuries, it's issuing those at 5% or plus on some of these notes. But it's paying off treasuries, it's retiring treasuries that were only yielding somewhere around 1, maybe 1.5% at most. And so we're now issuing treasuries that we're going to make that deficit gets worse, because now we're paying interest on bonds that's far higher than the interest that was on the bonds that we're retiring. And so if you look at it, the cost of interest now is approaching $1 trillion a year for the U.S. Treasury. Okay. What are your biggest expenses in the United States? You've got three main expenses that are kind of mandatory, right? You've got your entitlements, which are Social Security, Medicare, Medicaid, and those add up to over $3.8 trillion. Okay. Then you've got your defense spending. That's necessary. So so while the entitlements are signed into legislation, you have no choice. You must pay those. Those are in legislation, right? They're laws. You have to pay those. The other thing you have is defense. Those are long-term contracts with these defense providers. You don't want to, not pay for defense and your defense contract. There's a whole debate about how much of that is necessary, and that doesn't even include what's going over to Ukraine. So that's just $800 billion there. Well, our expenses on our debt, our interest costs on our debt is over $1 trillion. It's approaching $1 trillion. It's more than we pay for defense every year now. Just basically the United States credit card debt. And if you look at it as if you were just an individual, say you're a single mom or a single dad, then you are working multiple jobs, you've got kids, right? And you're trying to meet that margin. But you're struggling to get there, right? Because you have to pay your mortgage, you have to pay or your rent, you have to pay for your food, you have to pay your car, because you need it to get to your job if you're not working remote, unlikely, right? And then you've got your, kids, you've got to take care of your kids. So those are kind of mandatory expenses. None of those can really be cut out. And so if you're not making enough in your two jobs, what do? You don't have any more time to allocate to work. So you take out a credit card and you start running up that credit card. The problem is the interest rate on that credit card is high. And so eventually you get that to a limit. And what do? Well, you're not able to pay it off because you're not making enough money. You're still paying all these mandatory expenses. You take out another credit card. And then that runs up, and then another credit card. And eventually, Ryan, your credit is destroyed. Nobody trusts that you will pay that back anymore, and nobody will extend you credit. Now, I don't think that's going to happen in the United States next year, but that is down the road. That is where we're going to. And the proof of that is true. It's pure math. There's no way you can defend what we're doing mathematically. It's pure math that sometime in the future, the US dollar will hyperinflate and fail. We'll probably be the last currency to do so. We have the benefit of being the global reserve currency, and the treasury is a global reserve asset, which perpetuates the need for dollars, which is why it's going to stay entrenched as a global reserve currency. But eventually, people will stop to trust the United States.
Earlier in the month, the Federal Reserve increased its key interest rate by 0.25 percentage points, its 10th rate increase in 14 months. The latest hike pushed the Fed's benchmark rate to between 5% and 5.25%, up from near zero in March 2022. Not only is this the fastest pace of rate hikes ever, but because rates were kept artificially low for so many years, it's been so difficult for the economy to adjust so quickly. And this is not only going to affect banks and other financial institutions. As Lavish has explained, the U.S. government itself is going to be negatively impacted as it has to cough up a higher interest rate on Treasury bills. We could soon be looking at trillions of dollars just on debt servicing. Then add the government's other mandatory expenses like Social Security, defense budget, and Medicare. Cutting these expenses is out of the question. So is raising taxes, which will only make a tiny dent in the existing debt either way. The only solution, according to Lavish, is for the government to keep inflating or die. Let's get back to the interview as the former hedge fund manager describes the urgent need for Bitcoin to prepare for the disaster ahead.
People will stop to trust the United States, not because they think they're going to default on their debt, but because they don't trust that the inflation numbers are right. And they know that the United States has no choice but to print more money in order to monetize their own debt, because we have so much debt in our system. We have so much debt on the Treasury balance sheet that every single time more notes come due, we need to issue more. We issue more treasuries. And eventually, Ryan, the balance sheets of these corporations and sovereigns are going to be crowded out, and there's just not going to be demand for them anymore. And that's when we hit that point of inflection where that confidence is lost. The marginal buyer is gone. The United States has to pretty much monetize all of their debt, and it's game over. And is that going to happen today or tomorrow? No. Is it going to happen in 3 years? I don't think so. 5 years? No, probably not. 15 years, 20? Maybe. 50 years? Probably. 100 years? 100% likelihood. I believe that we need some sort of system to get away from that system. I believe that we need some sort of currency, some sort of store of value that can't be infringed upon. It cannot be seized. It cannot be censored, And so for me, it emboldens and bolsters my confidence in Bitcoin. There's absolutely nothing that can match it in the world. And so when you look at places like Lebanon or Venezuela or Argentina, the people in these or Ghana, they're, Zimbabwe, they're people who are being oppressed, who are unbanked. They have no way to save their money. Or if they do put it in a bank, it inflates to nothing and they just wind up losing it. So, being American centric, so many people say, yeah, but Bitcoin is it's so volatile. It's not a store of value. It's so volatile. Yeah, you tell that to somebody in Venezuela who's experienced 100% value inflation this past 8 or 10 months. That's, so it doesn't matter to them if Bitcoin is volatile. Bitcoin has demonstrated it's volatile, but it's an appreciating asset. It's okay if it's volatile and appreciating. It's bad if it's volatile and depreciating, which is what's happening to their currencies. It's the exact opposite situation. It's a no-brainer. What would you want? Would you want to have your money in Venezuela dollars, or would you want it in Bitcoin? It's a pretty simple answer, right? So what we're seeing is that people are realizing that there's these infringement on their rights. So if they want to leave that area that is infringing on their rights, is being controlling, or, they have some sort of dictator as a ruler, then if they can get out, they can actually take all of their money with them. I mean, I know somebody from Venezuela that did that, got his whole family out and their life savings. If they hadn't had Bitcoin, he would have lost it all. They would have had to walk away from all of it. But they were able to sell their house, sell their belongings, buy Bitcoin, cross the border, and never look back.
Here is one of the charts the Treasury Department featured in its report. The thick black line indicates the government's total receipts, while the blue line indicates the total spending. After 2020's crazy spending spree, the blue line shot up and will keep shooting skywards with almost no change in receipts. Lavish's analogy of a single parent amassing more debt to pay bills and get out of existing debt couldn't have been more perfect. What are your thoughts on James Lavish's vivid description of the U.S. debt spiral, the end of the Fiat Ponzi, and Bitcoin's role as a hedge against the coming disaster? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.